Hey, good evening, everybody. Taylor with GammaEdge here, coming at you with a post-market recap for September 22nd, 2025. And before we get going real quick, just wanted to, if you guys didn't already know, right, we do generally two YouTube lives a day, one pre-market prep going over everything that, basically the paid community gets. And then second, we generally do a midday roundup, between noon and probably 2:30 Eastern. Right, and we always alert you guys via email. So if you're not on the email, you can go to our website, sign up for a newsletter, and then you'll be on that email list. Anyways, getting to SPX price action today, right? Nice little rip. Had the Amazon news help the market out, and then pretty much made our way up to 6,700, which is kind of our top upside target for the day. We will get into that. A couple things to note, right? A gap down basically held our key DEX transition zone. And then basically moved right up to a top of drunken sailor range consolidation, then up to 6,700. So this is like a perfect level to level move in our system. We're going to get to pre-market prep, how we got all those levels here in a second, but just wanted to show you kind of how price action played out for the day. Yes, hindsight analysis, that's fine. My argument to that is, all the football teams that played yesterday, they were in the film room today watching next week. So like, if they're doing that, then why shouldn't we be doing that? Literally the best way to improve. So with that, let's jump into the Discord. Well, we can't jump into the Discord, right? But we can go to it and we can see what was going on there. But anyways, if you guys aren't new to this, I'm not going to go through it all. Like I said, we have the YouTube video we do every morning. If you're in the Discord, obviously you get this information real time at like 7 a.m. So plenty of time to get up to date what kind of our thoughts are for the day. The process, very simple. We analyze option market structure. So even if you don't trade options itself, right, the size of the options market today, very important, very influential on the day-to-day movement of underlying spot price, both in the indices and individual equities, which we will cover both. So starting kind of globally, getting kind of our swing trading time frame figured out, we do SPX-A, SPX-P full complex, right? Those are just the two components of the SPX that most of you are probably familiar with. You may have not known there's two components, but now you do. So we look at the full complex, just looking broadly how speculators across all expirations are positioned. Right, so we do that for SPX-A, look to see if it's call or put dominated, look for changes day over day to see if we can see shifts in the structure in terms of call versus put domination of the structure. Right, so if it's call dominated, we start to see evidence that calls are reducing their exposure and puts are coming in. That'd be important to know, right? So that's exactly what we go through. We have other various tools of just ways we slice and dice the option structure. Whether it be our true zeros, our GEX ratio, which is like a put call ratio, but we're using gamma, so there's a time component. So that's better. Delta balance tool, right? Options are inherently forward looking as opposed to a price chart, which is just history. Options give us forward looking data in terms of the expiration so we can understand how folks are positioned out in time and if that positioning is changing day over day. Right, then summary net stat, that's just a summary of our 3D surface model. So again, kind of tells us where those large peaks in the structure are, as well as kind of cumulatively how folks are positioned above in the spot price and how that impacts each of the Greeks. We do the same thing for the SPXP, which we give a little bit more weight to just because, right, we're shorter term traders in nature. So, right, SPXP is generally representative of more short term traders. It turns over a lot faster. Versus SPX-A is kind of longer term institutional money. We say SPX-A is the cruise ship, SPX-P is the speedboat. Right, go through all the same tools for that, and then that kind of sets the stage, right? If you're a swing trader, kind of overall backdrop, and then we get into specific SPX0DT, which is kind of its own animal in of itself. Quickly, if all this stuff is foreign to you, GammaEdge.us, click on free courses, GammaEdge Fast Pass. This is our kind of flagship education course. You get all the tools or really educational pieces on how to use the tools. The very next trading session, right? You get just the overall kind of philosophy, methodology, trading strategies, all that good stuff for free in there. Basically everything the paid members get. So yeah, give it a go if that's interesting to you or not. But anyways, focusing on 0DT, then we'll get to our swing trading stuff. Right, always start with the pre-market dashboard, how folks are positioned, distribution of speculation, right? So it starts with the transition zones. Again, GammaEdge FastPass, explain this all. Or go to our playlist on YouTube. We explain this all there, separate videos for everything. So yeah, DEX transition zone 60, 650, 66, 55, which what I pointed out earlier in earlier in the video, right? Kind of right where we found support, exactly how it should work in a bull dominated structure, right? Just a simple retest, and then we move higher. And then right above there, we have our drunken sailor range, which think of it like a boulder being pushed up a hill. So the top and the bottom of the drunken sailor range are kind of those key first goalposts in the structure where all else equal, those are significant hurdles to overcome. So just as a quick visualization, like looking at the distribution of speculation, which is um, denoted in our web app dashboard through synthetic open interest. You can see that as we work our way out of the transition zone, we can see that the exposure gets higher and higher and higher. So you can think of someone pushing up a hill until finally, right, you kind of crest over that peak, and then right, it gets easy, and then it just rolls down the hill. So you can think of that as that really, cresting over 66.75 makes it easier to then progress up in the structure as well. Having said that, we also need to see this supported by intraday buying. We do that via our market trend model and our intraday volume analysis of SPX 0DT specifically. So right, the thought today was getting above 66.75, it starts to bring 6,700 into play. And that's, exactly what we said in the pre-market write-up, right? We have a lot of if-thens based off of the key levels, based off of our analysis, based off the transition zones, and then the significant strikes where we're seeing a lot of clustering of positioning, right? Because just very basic, right? If you have a massive call strike above you, that when it's out of the money, it's presenting a negative charm. But if you're able to overcome that, you flip it to in the money. Now it's being supportive. So, right, trademark GammaEdge is moneyness matters, and we firmly believe that, which just demonstrated that simple example. So yeah, you guys can pause the video. You guys can read through this if you want to, or if you're in the Discord, right, you should have read it this morning. But again, just recapping exactly how it played out, find support at our transition zone, consolidated at that first large mountain at 6,675. We're able to overtake that, and then we progressed right up to 6,700, basically to the penny. Right, and so kind of the meat and potatoes of our intraday analysis is, through what we call our intraday volume analysis, or vol-M. Volume momentum is how it kind of manifests ultimately. This is the most popular tool in the Discord for 0DT traders. Right, and the way it works is like this. So every 5 minutes, we aggregate the volume. Call side is green, put side is red. Distribution, middle of that distribution is called a centroid. We plot the centroid every 5 minutes, blah, 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 connect the dots, create this nice solid line for you. So it's easy to interpret what the centroids are doing. The centroids tell us what the behavior of speculation is. So like in this case, calls are higher throughout the session. That is good, right? Price follows where folks are transacting. So as call speculation moves higher, we would expect price to move higher as well. Puts are moving higher as well. So all in all, we would expect a continuation in price higher, and then we couple that with our key levels that we just went through, and we leverage heavily in the session as well to kind of size our risk against, and how we develop our if-then statements. So we know that momentum intraday via call speculation is moving higher. We're taking out those key levels. So net, all of that is positive. And then from there, it's really just about deploying your strategy, right? Whether that's, selling premium, as an example, 6,700 was a massive level. We really didn't get any call speculation via the centroids above 6,700. So could have been selling premium above 6,700 if you're into intraday flies trying to pin a specific point. Our centroids help kind of project out, all else equal, where spot price could be headed throughout the rest of the session. And so yeah, this is really just a great way to help us understand what the character of price action is, whether that's trending sideways, trending higher, trending lower, and then kind of where it's the probabilities are that price heads at the end of the session. And just so you can see a concrete example of this was from 1:50 Eastern Standard Time. I'm not going to scroll back any further. You guys can do that on your own as well. But as you can see, call speculation from the open to 150 was higher throughout the entire session, right? So all things equal, if this is what it has done, we would expect speculation to continue to progress higher as well. And then same thing with the put side. Really no material risk of like a downside move, right? Unless we breached 66.75, which is the top of our drunken sailor range. We need to see like a material collapse in speculation as well, which obviously we didn't get throughout the day. So this is just a great way of understanding how to use this tool. And then to complement that, we have our market trend model, which is built off the back of the tick index, which is just measuring buying and selling that's happening under the hood of the market through, the various exchanges that feeds data to it. The largest ones being um, the New York Stock Exchange, the Nasdaq, the American Stock Exchange, all that good stuff. And so what we could see intraday as well here is the cumulative tick was trending higher throughout most of the session, pretty much a linear update from noon forward. Same thing, we had filtered tick buying as well, which is just a measurement of large tick transactions. So think plus or minus 1,000, which right is a general benchmark that the market accepts is large kind of orders being presented to the market. So the intraday volume analysis trending higher, getting filtered tick buy transactions. We're taking out those key levels overhead. So check, check, check. All that is good stuff today as why it made sense that we had a trending day higher. So if that doesn't make sense to you, leave comments in the chat here. Happy to answer those. Or if you're in the Discord, open a ticket, input a technical question. Happy to go over those as well. But today was a pretty textbook day. And then from there, we can get into the swing trading side of the house, right? Because we apply our options market structure analysis not only to SPX 0DT, which a lot of people do, but can be equally applied to individual stocks as well, provided they have significant liquid deep options markets. So, if you think about the big stocks, they generally do, right? Because our process methodologies that you learn in the fast pass are fractal in nature, meaning what can be applied from one instrument can be applied to another, one time frame to another time frame. And there's three key pillars of our swing trading strategy at GammaEdge. The first that kind of underpins everything that we do is our P2P strategy. And that's because that's just giving validity to kind of our methodology about the key levels that we use, carry weight in the actual day-to-day transacting of the market. Right, P2P stands for plus P-trans to plus GEX. Those are two of our key bullish levels as part of our methodology. And this is a 100% mechanical strategy. The buys and sells the night before tomorrow's open. So let's see. So tonight, right? Visa triggering as a buy, and Apple, Google, Nvidia, TSM triggering as sells because their profit target has been reached. This here is the live portfolio that we have right now. You can see we've been running it since July of 2023, almost 350 trades. It's a very high win rate strategy, almost 75%, which mirrors the back testing that we've done since 2013. And yes, the losers are bigger than the winners, but given the high win rate, that's why we have positive expectancy, significant outperformance to the buy and hold SPY, and then year to date, similar statistics to overall. So that's how you interpret this, and these are the current positions that we have. And again, all this is covered in the fast pass, or just go to this dedicated article, P-Transit plus GEX, and you can kind of unlock that strategy there as well. Next, we have the wheel strategy, which the wheel is nothing new to folks that are in the options market. You're just selling a naked put. Ideally, the market, the stock keeps going higher. Just simplistically, right? Stock keeps going higher. You just collect the premium, then you do it again on the next stop. But if you get assigned, sell calls, hopefully it gets called away, and net you are still making money. And so again, this is another automated strategy, or we're working to make it automated right now. We have it on TradeStation, make it automatically, and then we're just posting the trades that are triggering, working to get that into production to make it automated. But right, simply what we're looking for is stocks that have momentum behind them. We do that through the Minervini trend template. All right, if you're not familiar with that, it's just a simple way of finding stocks that are trending higher. And then we're applying the GammaEdge flare to it, which is applying our option structure analysis to find those stocks that are call dominated, which we know is a foundation for stocks to trend higher. So those are going to be your best candidates for selling puts in. And then right in the Discord, Paul has really led the effort on this strategy so far. I think this is the P&L curve of that we just posted an update over the weekend. So you guys are feel free to look at that. I think there's been like over 100 trades taken since July, and I think maybe a couple have been assigned to us. We recapped that on the open mic last night. Feel free to review that. But yeah, just wanting to show you guys, we are putting our money where our mouth is. Every strategy we do, every tool we do, we're using this. We're in the Discord with the folks every day, going over it, right? Telling them exactly what we're doing. So, we're not just giving you data, going back in our hold and showing up the next day. No, we're, in the arena, as they say. So we have that strategy. Then lastly, other things we do, right? just this discretionary stuff. Like, in the swing game plan every day, I post a bull and a bear list. It's just simply based off, momentum, like technical analysis type stuff. Not that I'm into that, but the market respects the 21 and 50 moving averages. So why not look at stocks above the 21 and 50 moving average? Like that makes sense to me, right? Hopefully it does to you. And then, right, again, we're just looking for call dominated in its structure. So if it's trending higher, calls are dominating the structure, like those are good stocks to be looking at, right? And then vice versa, the bear list is the opposite, right? They're trending lower, put dominated. So these are stocks that, if you're not in the shorting, that's fine. Don't have to be. But these are at least stocks that you don't want on your long watch list right now. And then right from there, I discuss, community discuss, right, positions that they're in. NVIDIA was the one stock that I'm in currently. Was in a lot more a couple weeks ago, but that exposure just has been reduced. I just haven't been finding a ton of other opportunities on a discretionary basis, but that's why I made the P-Trans and the whale strategy to take discretion out of it. And so, right, NVIDIA is working right now. I'm just waiting for premium to erode in that name. And yeah, we will go from there. So that really recaps kind of the full gamut at GammaEdge, right? From, pre-market prep, 0DT, and then our swing trading stuff. So hopefully something clicked for you there, something made sense. Again, comment in the chat, any questions you have, any feedback for us, things we're doing good, things we're doing bad, we would appreciate it. So with that, you guys have a good rest of your night, and we will see you all in the morning. Thank you. Bye.